Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Um, just want to share with you this beautiful view here. Sun's in the way. You can see this beautiful waterfall here. It extends out. Nice view here. I'm gonna just kind of minimize it so the sun doesn't disturb you here. Today we're gonna go ahead and we're gonna be talking about this earnings transcript terminal. It's actually called quantitative text analysis, computational linguistic analysis. And what we're going to be doing is we're going to go through about 50 to 100,000 tokenized words from the Clover Health earnings transcript. And we're going to go ahead and see if we can find some patterns um, for Clover. Now, the beautiful part is you could go ahead and put this for Tesla, put this for a whole slew of companies that you can go ahead and use, right? Yep. At the golf course here. Happy New Year's, Al. Al. Let's hope for 25 is good. 2026, you mean 2026, right? Yeah, we're gonna go ahead and do some stuff, and then we're gonna investigate and look through some really cool applications for this, and look through the earnings and comb through some patterns to see if we can. I found some really cool gems in that I want to talk to you guys about using this analysis. But first, I just, I want to describe to you kind of what's going on. So, really quickly, B-Rad Cooley posted this, and I thought this was pretty cool. This is from Robinhood. So this kind of gives you the analyst ratings. We kind of know kind of where they stand. The way analysts do their price target, it's input and output. And whenever the company reports better than expected earnings, then obviously the inputs are going to be better and favorable. And then the outputs, which is the stock price, is going to do well. A good example of this is how no price target of $3 was initiated when the stock price was 60 cents, 80 cents, 90 cents, a dollar. There was no stock price initiated. It wasn't until Clover's, it showed Q2 2024 was profitable 7.41 million that all the analysts started to revise their price targets. We're going to go ahead and look at the last Q&A session. In fact, actually, give me a moment here. I'm going to do one more thing. I'm going to add, I keep coding the software, add a Q&A question analysis to graph the interest in questions over time. It's actually going to be very powerful. Obviously, I'm the developer. I'm doing this whole thing. So in terms of the analyst ratings, it really isn't something that I look into. It's more of, oh, shit went down, and then it's reactive, not proactive, right? So now watch this. This is pretty interesting. Robinhood users, these are the retail investors, shows volatility during December 2025, including a significant sell-off of December 24 with a net flow of nearly 50%. Buy volume surged on December 26, but overall average net flow remained negative 26%, indicating retail investor caution for profit taking in recent weeks. Now, we already know November there was a lot of tax loss harvesting. So there's that. And then you can go ahead and read kind of what's going on here. Nothing really interesting, but one thing that I was going to say, and I'm going to start saying this when we approach profitability and the stock price goes up. If you can't stomach a 20 to 50% fall, 60% fall on a high beta stock. Now, what is beta? This is it's like 2.25, which means that it moves almost more than double that of the indexes. That's a very volatile stock. And, Tesla's a volatile stock, etc. If you can't stomach these drops, because, Humana dropped like 50, 60, 70, 80% before, I think around 50 to 60%. If you can't stomach these drops, then, I don't think the stock market's for you. Now, of course, you don't want to be like AMC, where you're stomaching a 99% drop thinking that everyone's wrong and you're right. You have to obviously do fundamental analysis and see kind of where this company is headed. So from that perspective, it is what it is. Sometimes, retail investors do what retail investors do. But next time when the pendulum swings to extreme bullishness, I'm just going to, make a t-shirt and says, hey, if you can't stomach a 20 to 40% drop, then maybe, you shouldn't be invested. And if you say, oh, we're going to go to the moon, screw that. and sentiment changes, and you're going to get extreme idiots and extreme extreme happy idiots and extreme sad idiots, and you're just going to go from these oscillations. And a lot what's going to end up happening is the price, if you're moved by selling, then especially when they're going to be profitable and the fundamentals are improving, then at the end of the day, I mean, really, it's very simple, right? Rapala said it best on Twitter. He said, if the folks who wait to see the story out are going to be the ones who get rewarded. Now, again, I'm not a financial advisor. Take everything I say as a grain of salt. Actually, a grain of salt's more useful. Take whatever I say as a grain of shit, right? I mean, that's what does that tell you, right? So now, what I wanted to do is, we just released. So I'm going to show you this new release with the computational analysis of earnings. We're going to go ahead and go through earnings, which is going to be pretty cool. You're going to see some really cool shit. But this one here, this is the rolling standard deviation model. This looks at the standard deviation of the healthcare sector versus. You can see that it's still, last time we've seen it this low was this actually of United Healthcare. The last time we've seen it this low was 1999. So this is a great way to look at a large corpus of data, make use of it. I'm going to make a video on that. I just wanted to show you that, this is a new release that we got. It's live right now for lifetime access. Now, what is all this? This is a mathematical proof from a PhD defense that I'm going to just kind of show you what it basically says. I'm just, we're not going to go over this right now. This is insane, right? But what it's basically proving is that it's going to segue into this. What it proves is if you take large corpuses of data and look at the words of earnings, and then take, let's say, for Clover's case, they've been publicly traded for approximately 5 years, maybe a little less. But if you go ahead and take all that earnings and all that data they gave us and break them down into single words, duplexes, triplets, and obviously 4 words, 5 words, 6 words, and you can even customize it. You don't need that much of a large sample size to make it predictive, to actually see patterns. So that's what we're going to do now. Nobody in the world is doing this unless you're a hedge fund. So this is probably the first time ever in YouTube that this is being shown, right? So let me show you. So what we can do is you go here and you type in CLOV, and it pretty much loads up these obviously transcripts. You can click on it and the transcript is going to pretty much basically show here. And from that you can I'll give you an example. Just kind of look at here, and it loads the transcript. And but what I want to do is I want to analyze and load all of the transcripts associated with Clover, and I want to analyze every word that Andrew Toy said, every word that these people have said, and we're about to do that right now. I just wanted to show you this one cool feature, and I want to make sure you hear it. So I'm going to open up this phone here. I'm going to go ahead and just kind of click on this. And first, let me show you. You can click on this.
Operator, ladies and gentlemen,
and you can
good
increase
afternoon,
you
and
can
welcome
increase
to
the speed. And let's do this. Let's do the speed of 2x. And if that's too fast, let me know. But let me see if you guys even hear this.
Clover Health third quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. A question.
And I'm gonna just decrease it. Just maybe like people are like, "Well, that's too fast." And beautiful part is you can increase the size. So for folks that have like a hard time reading, you can increase the size here. So we could go ahead and do that. But let me just go ahead and open this up to see if you guys can even hear it. I'm just going to start it here.
Gentlemen, good afternoon, and welcome to the Clover Health third quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the prepared remarks. Operator instructions as a reminder. Today's call is being recorded. I would now like to turn the call over to Ryan Schmidt, Investor Relations for Clover Health. Please go ahead, Ryan.
Okay, great. So you guys can hear it. I just checked here. Okay, so that's really cool, but that's like the least thing I want to show you. We're going to end up going through that, but I'm going to go just from the perspective of this, I'm just going to go ahead and reload the page, just start it all over again. And I'm just going to type in CLOV, okay? And this time, what I'm going to do is I'm going to hit the 10-year. I know there's like less than 10 years, but I just want every data for Clover. And I'm going to go ahead, I'm going to hit analyze. it's going to go through all of the transcripts now, analyze them and break them down. You can see how fast this is, right? This is not a game. This is legit, very fast user interface. And what it does is, and this is a single word, right? What this does is it gives you a top term, a full width bar snapshot of the words, of how many times that they've used it. But this is really nice, and it just gives you kind of an idea. But really what's amazing is there's something called Discover Patterns, okay? Now, of course, for members, if you want to get premium insights, this is an extra upgrade for even higher intelligence. But I would say this is pretty good intelligence when you click this button here. This is Discover Patterns. And when you click on this, watch, it shows you all of these patterns that are emerging, a regime change, accelerating, like for example, spiking, rising, reversal. These are words that the AI system has picked up that are different, right? That are like changing, which is good. Like for example, pressures. What does pressures mean? So if you click on this now, you can see it's gold. So what does that mean? If you scroll down now, you are able to see a graph of every time they've used the word pressure. And you can see they used a little bit of it in Q3, Q2, but really there's been a spike. And, they didn't really use a lot of it in Q1. There was no usage of the word pressure. I mean, they literally went from, -1 net income, assuming that the Inflation Reduction Act won't really hurt them on the Part D, to, obviously using the word pressure 11.97 times, which is, per 10,000 words. And this is huge, right? Huge increase in the word pressure. But let's say you're like, okay, well, what's the context that they use the word pressure in? Well, you can go in and you can press this button called contacts, and it'll bring you down to this thing called Context Explorer. Where did management say this? And then you're able to scroll here to figure out exactly when they said the word pressures. And it breaks it down to the year, the quarter in which it's said, and the speaker of who said it. So let's say we want to look at the first one. You click on this and it automatically loads that section of where they said pressures, and it highlights it in purple. Okay. And what you can do is read it. But before I even say that, let's say you want to read more here, but don't want to go to the full text. You can decide if you want to just look at a sentence or plus or minus 3 sentences and actually kind of search through where you want to look at before clicking up. So you can get kind of a splurge of what they said. But let's say you want to go to the full text. All you got to do is click it and it opens it up and it highlights it. And all you do is essentially, let's say you want to start reading here. Well, I already know that you guys can hear this. So I'm going to go ahead and press here and let's hear about what they mean in terms of pressure. Let's increase the speed to 1.5. You can increase the speed, the size, all this stuff. And let's start reading it here and let's see what they're talking about for pressures.
Importantly, we feel that we have adequately accounted for these trend developments in our updated 2025 guidance. Turning now to Part D, comparing year-over-year performance is structurally difficult given the changes in the IRA this year. That said, the continued Part D pressures that we and others in the industry discussed last quarter are higher versus expectations. We feel that we've performed well on Part D this year, but we expected and intend to do better. In particular, we have seen pressure in branded and non-formulary pharmacy spend. For this reason, we have launched ongoing initiatives around medication reconciliation, generic substitution, and care coordination to optimize.
So that's really cool. And then I got a request asking for a friend. How many times does Tori use the words dumpster fire? Actually, we now have the ability to search that, right? So that's really cool, isn't it? But what's the word that Peter likes to use, or like the pipeline is strong pipeline. So let's actually do that. In order to do that, what you can do is we could move on to the 2-word gram, analyze that, and then we could go search the word. I mean, Clover's watching this. They're going to be like, man, we got to watch what we say now, right? So watch. We go ahead and say strong It's right here. Look, let's click on strong pipeline. So doesn't that look like a nice strong pipeline right there? So oh my god! All right, so you can see, somebody started saying this in Q3 2024, Q4 2024, and they stopped using the word. I think you guys hurt his feelings. It was just a strong pipeline, and then they just stopped it, right? But let's look at the context to see kind of when they said this. And actually, Andrew Toy said this, and Peter. But it looks like Peter likes the word pipeline maybe more because he said it in other talks. But let's go ahead and read where Andrew Toy said strong pipeline. And this was a question from Jonathan Young. This was Q4 of 2024. Let's see what pipeline, what they're talking about.
Jonathan Young, hey, thanks for taking a question here. I guess I know we are early in the Counterpart Health store, but kind of when can we start expecting to see some of the revenue metrics kind of show up into the financials? And what's your expectations for this year in terms of pipeline growth? Andrew Toy, hey Jonathan, thanks for the question. So regarding Counterpart, we are very excited by that business. We have a strong pipeline, as we said in the remarks. We are not yet saying when we're going to be incorporating that into the revenue and into the financial results. Of course, it's a newer business, as Peter said during his section, and the way that we're looking at it is that we are really looking at it as a way to expand reach first of all. So we're looking at bringing more lives under Clover management, which is a key KPI of ours, and under Clover assistant management. Those economics will eventually become significant, we believe. But right now, of course, the core of the financials are being driven by the MA plan itself. So look for more announcements on launches. Certainly look for more partnerships. We'll be talking a little bit more later this year, I think, about how we see the lives growing under management and the clinical results. And then I think you'll see the financial side come a little later.
Awesome. And that's what they did recently about the lives growing under management. More specifically, the clinicians. And then I think you'll see the financial side come a little later. When a little later, I would like to know. I think we all do. Let's look at when Peter said the word pipeline. Let's go here.
Beyond the business momentum, in our own Medicare finance insurance business, we have good momentum in a strong pipeline for Counterpart Health, which provides a SaaS and tech-enabled services solution for third-party payers and risk-bearing providers. Demonstrating this during the third quarter, we announced a multi-year partnership with the Iowa Clinic to utilize Counterpart assistance for MA and MSP patients, marking our inaugural extension into the Midwest. While this is exciting, we are still in the early innings and expect Counterpart revenue impact this year to be insufficient. We look forward to sharing more detailed financial guidance and expectations in the future as we further develop and grow our Counterpart SaaS and tech-enabled services offering. Now, while this is exciting, we are still in the early innings and expect Counterpart revenue impact this year to be insufficient. We look forward to sharing more detailed financial guidance and expectations in the future as we further develop and grow our Counterpart SaaS and tech-enabled services offering. Now let me turn the call back to Andrew for closing comments. Andrew.
And this was back in 2024. So, okay. So let's see, it's a year. So we'll see what ends up happening for 2026. What else? You're saying, B-Rad Cooley, if you will. Okay, let's go ahead and do a 3-word gram analysis. And let's see all the times they said, if you will. Now, of course, guys, there's a better way to use this software. I'm going to show you. This is just for shits and giggles. If you will. Actually, I don't really see that. Flywheel. Growth flywheel continues. Flywheel spin. They're definitely using that word more frequently. In fact, flywheel, let's look at the context. Andrew Toy's been using this and also as well here. So again, you can see those things, but that's not why we're here. Let me show you how to use this effectively, right? Dumpster, I'm not gonna put that in because I don't think it's gonna come. Dumpster fire. I don't think anything's gonna come out of that. But maybe I do it at the end. So now let's go ahead and you can kind of make this smaller depending on your eyesight. Given that we're doing YouTube, let's make it bigger. What I want to do now is I want to discover more and I want to show you something. So we already looked at pressures and we've already seen that they're using the word pressures. Now the pressures are slowing down. So a lot of pressure talk. And it usually comes in Q2 and Q3. So we're going to be monitoring how many times they use the word pressure. But watch, let's just go ahead and just remove pressures. And let's talk about something important. Profitability. Isn't profitability important? Let's go ahead and click on that to see when they've used it. Holy moly of Ranoli. You could see that the word profitability wasn't really used a lot. And it wasn't until really here we've peaked in Q2 2025. And that makes sense because, last year in Q2 2025, they were profitable. So they're still aiming towards that. You can see you can almost draw like a technical analysis channel here with that. So the use of profitability is actually quite interesting, right? So they're actually using it more. So that's actually pretty good, right? So you could start seeing these words that are being used to look kind of deeper into it. And of course, look at the context and read everything that you can find about when they've mentioned profitability, and just kind of read all this and try to see if you can fix into it. And then obviously, adjusted EBITDA as well, right? What else? Or okay, Counterpart Health. All right, let's graph Counterpart. So you could see this is one of the AIs showed that this has been a regime change. A lot of these words are emerging. Counterpart is emerging, and it's it's used in these two AI handhelds, which shows that the word is being used a lot. So you can see Counterpart is in green, and you could see it was used a lot when it was first introduced. And then for some reason they stopped talking about it. The mentions of Counterpart wasn't that much. They only mentioned it, I mean, they're still mentioning it. They're still mentioning it like, 5-10 times. I mean, it's not like, it's not as much as what they said before, but I'm expecting hopefully this to rebound as they talk more about Counterpart and it becomes more of a dominating presence in their revenue. So this is pretty good. So let's investigate this, and you can like track to see how they've done, what they've said, and all these things. And so let's look at Counterpart. And I don't know, where do you want to read? I mean, let's just make this a little bigger so we can read it, because you could kind of make it small, but that doesn't help us. Let's make it a little bigger. And I'm just going to scan this through my reading software, which might be faster than what your brain can handle, but let me see if you can hear it.
Andrew Toy, thank you, Ryan, and welcome everyone to Clover's third quarter earnings call. There are three main areas I want to focus on today. Firstly, that our growth engine is running well, and we remain focused on growing sustainably and profitably. Secondly, taking everyone through the drivers of our lower guidance for 2025 adjusted EBITDA profitability and what we're doing to address it. In short, we do see broad systemic utilization pressure, but this is also compounded by our growth. We feel we can address this, but it did hit us significantly in 2025 because of that growth. And thirdly, talking about our recently announced
Yeah, so this is good. So this is not, now you can hear it, but I'm going to just scan this really quickly, and this is going to use my reading software.
Jay, secondly, taking everyone through the drivers of our lower guidance for 2025 adjusted EBITDA profitability and what we're doing to address it. In short, we do see broad systemic utilization pressure, but this is also compounded by our growth. We feel we can address this, but it did hit us significantly in 2025 because of that growth. And thirdly, talking about our recently announced star ratings and how we intend to ensure we can grow profitably, whether at 3.5 or 4 stars.
I want to just see if we can find something here.
Sure, from returning growth, we captured additional market share as competitors retreated, with the market disruption effectively accelerating our growth. This has led to reduced adjusted EBITDA profitability as a cost profile of first-year members, which we see as a combination of marketing, commissions, and first-year MedX puts pressure on our results. For the full year 2005, we now expect to add roughly 44 net gross new members with an expected year-end 2025 population of approximately 113 GGG net members. This has had a meaningful impact on our 2025 adjusted EBITDA profitability as we are scaling from a relatively small base.
Yeah, I like this. So let's go up here to find that exact area, and let's just kind of read what Andrew has to say here, and just go from there. And let's go from here. Yeah, let's see that.
Andrew Toy, thank you, Ryan, and welcome, everyone, to Clover's third quarter earnings call. There are three main areas I want to focus on today. Firstly, that our growth engine is running well, and we remain focused on growing sustainably and profitably. Secondly, taking everyone through the drivers of our lower guidance for 2025 adjusted EBITDA profitability and what we're doing to address it. In short, we do see broad systemic utilization pressure, but this is also compounded by our growth. We feel
this was in Q3 2025. This is the most up-to-date quarter we have for Clover, and I'm sure I recommend reading through this. There's a lot of gems in here, right? But let's go ahead and kind of go through it, and let's see what we can find. But you can see the words profitability is being used more. Also, a couple things that we're going to be looking at per member per month, those types of calculations. But let's go ahead and kind of go through this really quickly.
We feel we can address this, but it did hit us significantly in 2025 because of that growth. And thirdly, talking about our recently announced star ratings and how we intend to ensure we can grow profitably, whether at 3.5 or 4 stars. Overall, I want to say this. We missed our targets on both overall adjusted EBITDA and stars. While we will remain profitable and growing, these misses aren't at all acceptable to us. They do not capture our aspiration or bar for the company. We can and will make quick adjustments. The good news is that Clover Assistant remains incredibly strong as our core driver. Our CA managed returning cohorts improved year over year. CA also enabled Clover to be the top PPO in the country for the second year running on core HEDIS clinical quality scores. The bad news is that while we did plan for
as you can see, let's just kind of read this again.
CA also enabled Clover to be the top PPO in the country for the second year running on core HEDIS clinical quality scores.
So essentially, it allowed us, Clover Assistant enabled Clover to be the top PPO plan in the nation, running the highest HEDIS score quality measure, which is going to be a big weighted in the CMS star ratings in the future. And then if you look at Kevin, who's now the chief product officer, he specifically stated that, the financial implications of this positive news is going to hit 2 to 3 years from now, which it takes time, right? Healthcare is obviously, there's a human aspect of it and a human quality, and it usually takes time for these things to show up, especially if you want to do them correctly. Let's go ahead and continue reading. So, but the big thing here is it's the top HEDIS clinical quality plan in the nation.
Y scores. The bad news is that while we did plan for growth and utilization headwinds, we clearly didn't factor those in strongly enough or manage those tightly enough in the non-CA population, which definitionally includes the new members. So, those areas are where we're going to intensely refocus going into 2026, which I think.
So let's go ahead and just read that again, but this time make it a little more slower.
The bad news is that while we did plan for growth and utilization headwinds, we clearly didn't factor those in strongly enough or manage those tightly enough in the non-CA population, which definitionally includes the new members.
So essentially what they basically are saying here is that these growth that they had, it was tightly associated with non-Clover assistant populations, which is essentially new members that haven't been kind of funneled in the Clover assistant, system, right? They're still seeing their doctors and they haven't, used the software, right?
W members. So, those areas are where we're going to intensely refocus going into 2026, which I think is going to be a big year for Clover.
So they're going to be focusing on that for 2026, where Andrew Toy said it is going to be a big year for Clover. Now, again, Andrew doesn't like to use pompous words. He, says it, pretty, I would say pretty there. So they do believe that Clover is going to be a big year. I believe it's going to be a big year because, again, they're going to be profitable. By how much? Questionable. I would say on the low end, $20 million. On the high end, I'll say, how about this? On the low end, $20 million. On the middle end, about 50 to 80 million. And then we'll see any more. I'll be very happy. But low end, 20 million. So from that, he says that he believes that Clover is going to be it's going to be a big year for them next year, which is pretty much in 2 days. And we're not really going to see that first quarter until May 2026. But in January last year, they released the growth rate numbers for Clover, the annual enrollment period. Now, from what it looks like, the growth rates are going to be pretty sexy, given what they were saying in terms of past documentations when they released the 3.5 stars. The goal now of what they're trying to do is most likely limit the excess growth that they had during the year, which caused more new members, which then increased costs more than what they anticipated, right? So that's kind of the thing. But let's go ahead and continue on here. He believes it's going to be a big year for Clover.
A profitable on a wide network, while growing membership by 35% and revenue by nearly 50% year-over-year. Refocus going into 2026, which I think is going to be a big year for Clover. Okay, going into more detail. For the third quarter, we've remained adjusted EBITDA profitable on a wide network, while growing membership by 35% and revenue by nearly 50% year-over-year. That does meet our goal of profitable growth. Other plans which grew this much on the PPO have been pushed into retreat. That said, I want to note that we did originally enter this year intending to have significantly higher overall adjusted EBITDA even with the growth. Growth. Ultimately, this adjusted EBITDA pressure came firstly from the higher than expected proportion of new members and the fact that we didn't bring them under management as quickly as we originally planned.
So that what they're basically saying is this new growth that they got, they didn't anticipate it being higher than expected to the proportion of new members versus the returning members. So there's two issues here. They grew more than what they anticipated. Now, why did they do that? A lot of plans were cutting commissions, and they were limiting growth. So they were cutting commissions, and what Clover did is Clover kept giving commissions, and that allowed, obviously, if the broker is going to get paid selling Clover, he's going to sell more Clover. I mean, it's kind of simple, right? If my livelihood depends on feeding my family, I'm going to sell you Clover, right? I mean, that's what it is, right? Even though Clover, I think, is a wonderful product, it's just that's how the world works, right? You pay someone to do something, they're going to do it, right? More of it. So they got more members than what they can bite off. And the second issue is those new members that they got, they didn't bring them under management with the Clover assistant quickly. which is what they say. Let's go ahead and kind of reread it together.
Ultimately, this adjusted EBITDA pressure came firstly from the higher than expected proportion of new members and the fact that we didn't bring them under management as quickly as we originally planned. And secondly, we saw increased utilization across both medical expenses and supplemental benefits similar to others in the industry. I'm going to focus on the first, and Peter will discuss more on the second. On an adjusted EBITDA basis, our returning members continue to have a contribution profit, but this did not fully offset the dilution from our larger than expected new member growth. While we had anticipated this pressure from returning to growth, we captured.
So he said something very important here. Now I'm going to just go ahead and just, I'm going to read this. I'm going to have you read this again.
On an adjusted EBITDA basis, our returning members continue to have a contribution profit, but
I'm going to stop. So on a returning adjusted EBITDA basis, the returning members continue to have a contribution profit. That shows you that the Clover Assistant is working. That means the returning members are better managed, are better clinically managed, which is why they have the HEDIS quality score ratings high. But that offset didn't offset the negatives of the new members, which was larger than expected. So now what Clover's doing is they're strategically trying to limit growth. And they've learned what the market is looking for. And again, Andrew, I know like it's a shame that you have to do this, Andrew, and I'm it's sad. Wall Street doesn't believe in your numbers right now, given that you only had one analyst ask questions in this earning call, which we'll go ahead and talk about. But Wall Street doesn't believe that your software works. And, if you go back to the first earnings call of what Vivek was basically telling them, he gave them a postulation assumption that you have to believe that this thing works in order for you to really, truly evaluate the company. And the unfortunate part is they have not done that, and that's just Wall Street. So, granted, in an ideal world, we would go ahead, open up the floodgates, and allow you to do it. It's just the negative part is ACO, didn't, unfortunately, ACO didn't work out for us, which caused the hesitation alongside of these things here. So, Wall Street wants you to show profits. And once they see about 1 to 2 years of profits going up, then, they're going to most likely say, wow, this thing works. And then you're going to be able to hyperdrive the counterpart growth. And I think that's when the market's going to start rewarding you. It's just that's how the game is working right now. It is what it is, right? And once you prove yourself, then maybe you might get a bone from the purse. But right now, it doesn't seem like that. But it gives an opportunity for folks that notice this to essentially make money. So, be able to buy an ASIP, buy low, right? Let's go ahead and continue reading this.
But this did not fully offset the dilution from our larger than expected new member growth. While we had anticipated this pressure from returning to growth, we captured additional market share as competitors retreated, with the market disruption effectively accelerating our growth. This has led to reduced adjusted EBITDA.
So let's read. Are you listening to what this thing is saying, this machine? So while we anticipated this pressure from returning to growth, we captured additional market share as competitors retreated, with the market disruption effectively accelerating our growth. So essentially, they knew they were going to grow, but they grew more than what they thought they were going to grow because of everyone retreating. So that's kind of the imbalance there. And hopefully Counterpart is able to help them with this imbalance, but it's really the surveys that really attacked them that really hurt them on 3.5. So that's what they're going for. They're going to fix it, hopefully get the 4 stars for payment year 2028. And hopefully, maybe, who knows, they might be able to change that star rating. But, I'm not putting money on that, but we'll see. Let's go and continue reading.
EBITDA profitability is the cost profile of first-year members, which we see as a combination of marketing, commissions and first-year MedX, puts pressure on our results. For the full year 2025, we now expect to add roughly 44,000 gross new members within an expected year-end 2025 population of approximately 130,000 net members.
That's a lot. So they've pretty much added 44,000 new members. That's like more than 50%. That's like they've grown members more than, like, holy moly, that's a lot of membership growth, guys. So that 44,000 members for future expected profit, if you use that chart that they gave us let me just show you, because I've looked at this, studied this company so much. I assume you guys know, but most people don't even. They just look at the stock price. That's all they know. So let me just show you. So they gave us this diagram. What I did is I just found this funny. They gave us the year this year, and then they gave us the the year to date. And it's a shame. It's this year to date. I don't know if this is going to be worse or not, but they gave us the year to date, and then they gave us the 2026 expected. But what's weird is they gave us this pixelated box. So I said, well, maybe I could go ahead and count these boxes and then be able to estimate what, because I was very clear that they put this in Excel. They obviously put a number here. This is a numerical value. This is a graph. So I was like, well, if that's the case, then can I just kind of count these boxes up to figure this out? And I did. That's what we did in the lifetime access in the Discord. We were just doing the boxes. And this is about -80, and this is about positive 248, 250, which is kind of interesting. And it kind of makes sense, based off of these numbers, but we'll see what they're expecting. But just from the perspective of just kind of this year, that $217 based off of this 44,000 members, this is per member per month. Let's just use that 44,000 and multiplied it by $217. So every month now, these new members that Clover got, it should in the future bring us $9.5 million in profitability. Multiplied that by 12, these new members, the pain that we felt this year of getting this growth is going to help us get about $114 million of profitability in the future. Now, of course, this includes variable SG&A, but doesn't include fixed SG&A. So you would have to then alter the fixed SG&A and subtract it from 50% of stock-based compensation, which they said is going to decrease by half, right? So essentially, what I'm looking at is let's go ahead and let's grow. Honestly, Andrew, let's grow as much as we can this year. Burn the hell out of the stock price this year. Just burn it to hell so that in the future, the net income is going to be higher. Because let's face it, let's assume Clover was $4, $5 now. I wouldn't be selling because there's counterpart down the line and all this other revenue. So obviously, might as well get the bigger piece of that net income in the future. And with the beautiful cookies about to basically be given with the counterpart health SaaS revenue. So that's how I look at I look at it as, and they're going to be addressing this, which is going to be really good. So let's just continue reading this. And yes.
S has had a meaningful impact on our 2025 adjusted EBITDA profitability as we are scaling from a relatively smaller base and new members are generally loss-making for us in the first year. That said, our cohort experience and strong historical retention demonstrates that this large new population will bring a larger contribution profit positive base of returning members in 2026 and beyond. We also expect 2025 to be the peak year for this kind of effect. In our modeling, with our latest cohort data, we expect that we will be able to continue growth and have meaningful adjusted EBITDA profitability starting in 2026. That was our goal for 2025, but we were extrapolating new member performance as this was our first year of significant growth. EBITDA profitability starting in 2026. That was our goal for 2025, but we were extrapolating new member performance as this was our first year of significant growth. Now,
exactly. So what he's basically saying is they were expecting, I was expecting as well, given that they were profitable last quarter. Remember, last quarter, Q2 2024, they made $7.41 million. So we would have assumed that they would have made more this year. Everything went to hell in Q2. Let me explain. Let me show you the numbers. So let's open up lifetime access. Let's open up the financial data metric software, and let's open up and put CLOV. You put CLOV, you instantly get the data. You go to get the quarterly here, and you fetch the quarterly. Look at the net income. If you go ahead and look at Q2 of last year, well, first look at Q1. Q1 of last year, they lost $19.17 million. They lost, let's call it $19 million. Well, if you look at Q1 this year, it was beautiful. They lost negative $1.27 million. They only lost about $1 million, which is pretty damn good. They only lost $1 million, which is very good. That's an improvement of approximately $19 million, $19 million. That's a big improvement. 18 million improvement. That's pretty good. But what ended up happening is, Q2 2024, last year we were up, 7.41 million. So if you go to the stock price in Q2 of last year, which is about the halfway point, what happened to the stock price in Q2? Well, Q2 is around August, September, right? So what happened to the stock price when it became profitable? It exploded. The stock price literally exploded that second half because, it went all the way up to $4 plus because they were profitable in Q2. So it's like, well, wait a minute. Are they going to be profitable from, next year? And that was Andrew Toy's plan of what he was saying here. That was our goal in 2025. But unfortunately, they grew more than what they expected, and they didn't cycle those folks to kind of rush them into Clover Assistant, which technically they are non-CA members, which is actually pretty good because then they can show you what these non-CA members are doing, which shows you the power of the Clover Assistant, and which wise, subdomain-wise, we're starting to see the likes of Humana show up, right? So so there's that, right? And then let me see here. So what unfortunately happened was, we're expecting profitability in Q2 this year, but we went to negative $10 million. So we went from 7.41 million to negative 10 million. And then last Q3, we were negative 9 million, and all of a sudden we dropped to negative 24 million. We're going the wrong way. And that's because those are the new members. And we just got to take these new members and we got to just cycle them and push them through the Clover Assistant, right? And that's, what they're going to basically try to do right now, trying to get them to be seen so they can manage these patients really quickly. And then they're going to be getting new sets of people that they got to push through this technology, and they're going to be, hopefully these costs end up going down. That was their goal in 2025, to be actually break even, because they're going, you can see it in Q1 2025, they only lost negative 1 million, around negative $1 million and some change, but their job, hopefully was to be break even this year, but that didn't happen. That was their goal. And then, get to at least some form of profitability, but now potentially break even or even 10 to $20 million in profitability next year will be the start of it. And hopefully that continuously goes up. Let's continue.
That was our goal for 2025, but we were extrapolating new member performance as this was our first year of significant growth. Now that we have that under our belt, we feel more confident in our views on 2026 and beyond. Ultimately, we believe the fundamentals of our business remain strong, and the margin pressure we're seeing this year is driven by cohort dynamics. Each new member represents strong long-term value, but requires time to come under full Clover Assistant management. While that dynamic compresses margins in the near term, it's exactly what we believe builds the foundation for margin expansion and accelerated growth in the years ahead, where we anticipate rapid improvement in outcomes and cost performance in our cohorts. Said differently, our returning Clover Assistant managed members remain strongly profitable and are effectively funding this reinvestment in acquiring and developing new member cohorts. Our confidence in Clover's trajectory is rooted in a simple truth. We believe that our model delivers better Medicare Advantage results for more seniors. Clover Assistant is designed to identify and manage disease earlier, providing a multi-year improvement to total cost of care. When paired with our care delivery assets and the close partnership.
So we already know this. What I find interesting is they said that even with all this growth, their medical cost only went up 4%, which we talked about in that Excel spreadsheet in the videos before. Again, I would say pretty good. The rest of the issue was Part D, which then we're going to get the Part D subsidies and whatnot. So again, you can go ahead and look at this and look at these words. And I was up on this all night looking at the words profitability slowly increasing. And we're getting there, guys. We are slowly getting there. And I'm going to be monitoring other emerging words. Like, for example, if we go ahead and do a forward token analysis, you could see, we're analyzing 112,000 tokens. And these are the words that come up. If we can discover patterns, we could start to see really cool words here, per member per month. That's something I like. Let's just search it. Per member per month. And you could see that it was accelerated here, and then now we're slowly, talking about it now. And this was when, yeah, so let's see. Let's look at the context to see when they were talking about it. Let me just kind of skim through this.
On average, notably, we deliver more contribution profit from our profitable returning member cohorts than our new member cohorts. Returning member cohorts during the third quarter year-to-date 2025 period have generated approximately $5,217 of contribution profit per member month as compared to a negative contribution of $110 per.
So that 217 versus 110 is what we talked about in that Twitter post. This was back in 2023. Let's see what they say here.
I want to emphasize that I'm not referring to a couple of percentage points of improvements. In 2 years, we successfully reduced our insurance MCR by approximately 25 percentage points. In 2021, our insurance MOR was 105%, followed by 91.8% in 2022, and then most recently, 1.2% in 2023. The significant improvement in MER since 2022 alone has driven a 191% improvement in our member per month insurance gross profit, which has increased from a 7 PM profit in 2 not 2 to a 245 PM profit in 2G. Most importantly, the step change improvement in our insurance results have translated to a full year 2 and 23 adjusted EBITDA loss of $545 million, which is another significant improvement from 2022's loss of $292 million. I believe that this large improvement in gross profit and adjusted EBITDA demonstrates the rapid and outstanding progress we made to our core business and is a result of clear focus by the Clover team. Over the past few years, we have focused on monitoring operations, including improving processes to increase the accuracy of claims payment.
So yeah, this is really good, guys. This is very, very good. So let's. I want to show you this real quick. So let's increase the speed of this. Yeah, 1.75 is good. So this was posted on Q4 2023. This is Andrew Toy, and this is what he wants to say.
I want to emphasize that I'm not referring to a couple of percentage points of improvements in 2 years.
So what Andrew Toy is saying here, let me just kind of highlight
E2021.
it. So I can.
I want to emphasize that.
Yeah. So what he's saying here is he is not emphasizing that he's referring to a couple of percentage points improvement in MCR. He says that we've successfully reduced our insurance MCR by approximately 25 percentage points, aka 2,500 basis points. Now in Counterpart, they only advertise 20%. Here you're saying 25%, which is 2,500 basis points. He says that in 2021, our insurance MCR was 106, followed by 91.8% in 2022, right? So that's literally within a year. That's like a huge drop. 106 minus 91.8 is like insane. 106 minus 91.8. That's 14.2% drop. And then I lost my place. Where was it here? 91.8%. And then he says in 2022, and then most recently 81.2% in 2023. The significant improvement in MCR since 2022 alone has driven 181% improvement in our per member per month insurance gross profit, which has increased from, watch this, guys, $87 per member per month profits in 2022 to $245 per member per month profits in 2023. So isn't that interesting? So it used to be $245. It used to be $87. I need you to focus. This is why this software is very important. It allows you to really get in there. Okay. So in 2023 Q4, basically reporting in 2024, right? This was in Q4 2023, which was reported in February this year, right? Because they report Q4s in the next, like Q4 2025 is going to be reported in 2026, right? So what they've said here is the per member per month was $245 of profit for returning members and about $87 negative for new customers, new patients. That's different than what they showed us here. Now they're saying 217 versus 110. And what they're projecting is this number here and this number here, which we did our box analysis because we looked at the pixelations of this box and we said, well, we can, this was obviously written in Excel, so we can go ahead and just kind of cut out these boxes and just kind of assign them a unit-based value. And we did that and we got negative. So what this box value analysis is showing us, for next year of 2026 expected from the horse's mouth is new members now costing -80, and then returning members giving us around 248 to 250, which actually falls in line with how they used to be back in 2023 Q4 or this year when they reported it in February. And if you don't understand this, that's why the rich become rich and the poor become poor. I mean, it is what it is, c'est la vie, right? All right. So now what you're seeing here is $87 per member per month for new members and $245 per member per month in 2023. So that's what they're going to be gunning for. The question is, how much do they need for that profitability? Their expectation is this much. But the question is, does this include the 4-star payment year and rate notice? Or is this just purely Clover Assistant driving these performances without the 4-star payment year and the CMS rate notice and the Part D subsidy? If that's the case, then this number should be higher. And that's what Pavan was alluding to yesterday when I was talking to him about it, when we were counting these damn boxes. Right? So it's quite interesting. And by the way, you see this beautiful view here? Wonderful, wonderful. Look, this is the American dream, right? So it's beautiful. All right. So, let's see. So, I mean, that really encourages me that, well, if they were 245 PM before, then what? Are we just going to go back to where we were before earlier in the year? That means this may not include the 4-star payment year. And that's my question to Peter. And my answer is, why would they include the 4-star payment year onto this? They shouldn't. Maybe they included the rate notice because that 4-star is only for a year. Because we're going to go back to 3.5 stars. So why would they include it here? It just will just mess up the data. So I think that this number is only going to get better. But it shows you that in the beginning of the year, because this was Q4 2023, which was reported this year in February. You don't believe me? Let me show you. Honestly, I don't believe me. I gotta double check. You see that? So Q wait, hold on. I'm sorry. What am I? You see, that's good. This is why we check. 2023 Q4. That was a year ago. Sorry. Not because I was confusing 2024 Q4. So this is even better. This even proves the point. This is even better. The fact that a year ago, so let me okay, I gotta mentally. So this was posted. This is Q4. This is what we're talking about here. And what was the MCR? It was 82%. Right now, their MCR technically is around 84. It's 2% more, which explains it. And this was posted on March 12, 2024. So this was about right before they exploded. Yeah, this was just right before they explode. There it is. Bingo, tingo, bingo. Right before they exploded. This was right before Q2. Yeah, which means this was right before Q2. Right when they gave $7.41 million. Yeah, you see, that was right before they gave. Yeah, you see, I'm kind of mentally. So perhaps this is the number that they need to become profitable. Is 87 PM in about 245 PM profits. And how much of that improved is something else, right? Like, what is it going to be next year? This year, unfortunately, it fell down to $217. Still a good ratio, but it used to be 245. The question is it going to go back to 245? Or is it going to be more? The fact that it was more before about a year ago at 245 suggests that it might even be even higher now because of that 4-star payment year. So I think that's what it is. So I think that might be the case. It might be actually even more. Or you could argue the fact that they're growing rapidly, they might just hover and stay around 245, 250 because of that excess growth. And the fact that they're going to be hopefully staying at that 245, 250 only shows you that the Clover Assistant is obviously working, which is indicative in the MCR improvement. I hope that made sense. That was a very important number to look at. All right. Let's see. What else do we have the per member per month? Do we see it here? That's why it's so important here. You start looking at these in a whole different perspective. It's 245. I'm just searching this in real time. And this shows you the overall gross margins, because if you read here, let's click on this. This was back in 2020 Q4. And this is what Mr. Gary Taylor said. Read what he said.
So first enrollment, you're now saying up to 200,000. Before you had just said 200,000. So I just want to make sure if that has changed. Why? Second is on revenue. If we do 9 months of 200,000 at $1,000 per member per month, that gets you to like $1.8 billion. But you're only guiding for $900 million, which I guess implies you won't get the whole 200,000 in April. Little tend to be rateable.
So what does that mean? That means per member, they make approximately about, on average, it's a lot easier to it's tough it's really tough to calculate, but I'm trying to calculate their gross margins. That's hard to do from this perspective. You just got to take their total lives. What are they going to have? Like 133,000? What was it? They said they're going to grow 44,000 last year. They had around 80,000. Right, that was their life. I mean, what am I asking? Let me just let's just look at it here. Was it? We could search it here. 113,000 net members, so they grew 44,000 lives. So what you could do is they're gonna have 113,000. They're doing about 185 billion dollars this year, divided by 113,000. That's about $16,371 per year. Divide that per month. They're making about $1,364 per member per month. So let's just kind of do this, put this chalk math here. 1364.30, just to be a little accurate. And right now their PM is 217. Right, on average, right, 217. That's how much they're making out of this, 217. But that's not right, because that's also including new members. So you're gonna have to subtract it from 110, which is what this number is down here. That'll get you the effective. So you have to subtract it from 110. So if we do that, you get, 217 minus 110, you get about 107 divided by, 1364.30. And that should give you a gross margins of around 7%. Right now, if we go to financial, the stock terminal here, let's look at the gross margins. So you can see the gross margins slowly faltering in Q3 because last year they were 24% and then they used to be 30%. So they're faltering down because of this change. The question now is, this is trying to get at their profitability. That's still pretty good. But if they get better, let's say this goes to 250 and this goes to 80, then that'll be 170. Now all you got to do is just take 170 divided by this number here. If they were to be as planned, and that's 12.4%. That's straight profit subtracted from fixed SG&A costs. So if you want to figure out returning members, which they basically gave us, is 217. The question now is, why did returning members go down? That's the question we have to ask yourself. Is why did returning members go down? Because returning members used to be 245. And you might say, oh, because of the growth. Well, that's not right because they split new members versus returning members. The question is, why didn't returning members go from 245 to 217? That's the question you have to ask yourself. And that's where they get into the pickle of them talking about the dental issues, inpatient, outpatient, and vascular issues, and the overall inflation of what healthcare just does. So that's the real question, is how much did that go up by? And that's the thing that we want to discuss, is why was there a decrease? So we used to be 245, right? So if we go from 245 down to 217, what percent decrease is that? I'm just doing the math here. Oh shit, my bad. I'm using the wrong model. I'm using like a silly model here. It should be a lot faster. We'll wait here for a million minutes. So that's about 11.43% decrease in profitability over a year. Over a year or two. So why did PMPM go down? Why did it go down? That's the question. You see, and that's what it is. You see, it's interesting because MCR stayed relatively the same. So the question is, then why did the PMPM go down? And I think I know what the issue is. I think because they're giving a lot of benefits to these patients, and that's part of the Clover model, is to save money and to pass those savings down to the patient so they get more free shit, right? That's their flywheel model, which then attracts more patients, yada yada, right? So I think that's why that's the case, because it doesn't make sense why returning members dropped. So that's something that is interesting. And yeah, I mean, it dropped. So I want to know kind of why that was the case. Let me Google, or not Google, search on here, PMPM. Let's search the word PMPM. So there it is. It was used a lot there, and then it slowly started being used. So let's look at the context analysis, and let's see if we can track this. This just talks about the. Yeah, here's where they mentioned the 87 versus 245. And this is them being at an adjusted EBITDA loss of 45 million. Now, granted, this is when they still had the issue of ACO. So that's something I want to know. EC, here, this high touch program was able to produce approximately 500 in net PMPM medical expense savings, driven by lower spend at the end of life and reduced inpatient admissions beyond primary care. Clover Home Care also provides services approximately 20% of the population. So again, it's something with their inpatient admissions. That's what they're noticing. They're noticing that inpatient utilization is increased because their PMPM should be a little higher. It shouldn't have gone down. Relatively, returning members, this should relatively stay the same, and this should go up. Sorry, this should be worse, right? Because obviously new members are not as healthy and et cetera, right? So that right there explains something, that this drop is most likely inpatient utilization, but somehow from a medical cost perspective, they went up 1,000, pretty much they went up 10% in costs, but they said 4% of that was due to medical. So does that include dentists? Ding, 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 ding. So I think they need to figure out what's going on in the dental world. And that's what this is signaling me, is the dental world. Like, what's going on here, right? What's crack-a-lacking here to go bring this down? So that's what I want to look at. And of course, is this, they're expecting it to go up, but they're expecting it to go up to 250, which is not surprising because they've been at 245 before, back in 2023, as you can see in this analysis in our earnings transcript terminal. So again, we're going pretty deep here trying to figure it out. So again, there's not a lot of data that they need to give us a little bit more data here for that. But they are going to be profitable. So this is, this next year, Andrew, this next year really is going to be your year. If Clover fumbles this year, it's, you're really going to lose there comes a time where, I said that once I get sufficient amount of data, which as you can see, I'm slowly starting to collect. I'm getting all this data right now, and I'm starting to make a thesis. This PMPM of returning members should go up, because this shows you that the medical cost ratio, you're able to reduce cost, which then should make you more profitable, right? Now, of course, your medical cost ratios went below, so you're doing well, but this should go up, and this should go down with time. This takes, again, takes 3 years to get the 1,400 basis point reduction, right? So this is kind of the thing what I'm looking at. So next year really is going to be our year. Now, again, Q1 2025, what was their PMPM? Again, this is year to date. This is a per member per month year to date, with probably Part D maybe. So you know what this means? So again, I'm peeling back onions here, and I'm thinking out loud. So why is this up? I got it now. It's because it's Part D. Part D is in this stupid thing. So the reason why returning members dropped is because Part D effed it up. Part D screwed it up. Part D increased this by a lot. So yeah, so that's probably why this dropped. So the fact that we were at 245 before, only makes me really believe that we're going to most likely be higher. Because remember, if you go, and I was wrong here I read this incorrectly. If you just kind of read this really quickly, and this is very powerful. Let's just kind of let's just start reading from here to here. I'm going to have the machine read it, and then we'll read it.
Percent improvement in our per member per month insurance gross profit, which has increased from an $87 PMPM profit in 2022 to a $245 PMPM profit in 2020.
That is incredibly effing crazy, and that is them not growing their Medicare Advantage that much. So let's just read this together. So the improvement in our per member per, this, by the way, this was released in 2023 Q4. And what it basically says is their improvement in our per member per month insurance gross profit, which has increased from $87 per member per month in 2022 to 245% increase per member per profit in 2023. The question is did they increase in star ratings? What was the star ratings during that year? And does it include that? So that you got to kind of backtrack this, but that improvement is like a lot to go from 87 to 245. See, I thought this was the loss. I'm sorry. I thought this was down here. This is even more bullish. So again, this is a live, and we're slowly dissecting this in real time, right? So $87 per member per month to $245 per member per month. So that means what I want to know is what was the net income of 2022 versus the net income of 2023. And let's look at the improvement of $87 to $245. What is the percent improvement of this? So let's just kind of take this here.
$187 PMPM profit in 2022 to $245 PMPM profit in 2023.
And let's just look at, let's open up Google Doc. Let's just kind of pop this here, and let's just put this here. Let's put the $sign, and let's increase this by a lot so we can see. So this was, we could just kind of do this and do this. So the overall percent increase from 2022 to 2023 on a PMPM basis is equal to, whatever 87 to 245 is. So, I mean, we could just do percent here, percent increase calculator. We'll just type in 87 87 is a starting value and about 245 here, and then we'll calculate. So that improved by 886% increase. Well, that's not the same size. There, 87% increase in, and per member per month profit. So now let's look at the net income. Let's look at the net income for 2022. And then let's look at the net income for 2023, and let's see how that translates, because that's an interesting question. So to do that, we got to go to this financial statement here, and then we'll go to annual. And in 2022, they were negative. Holy shoot.
339.57.
They were negative. It's a lot, guys. They were negative $339 million in the hole. That's what I'm saying. Like, if you were buying Clover in 2021 and 2022 versus buying Clover now, it's become a better business. And if you are like, oh, I hate this, and the reason why people are having that is because, it's been a long time. It's patience. That's why the stock market, they said it's a transfer from the inpatient to the patient. So for the old folks that are impatient, thank you. Give me your money. I love the American dream. Thank you. Thank you so much. Right? I appreciate it. Thank you for giving me a Rockefeller dynasty family. Go back to your W-2, right? It is what it is, right? That's Wall Street. Anyhow, so let's go back and let's do the 2023. Okay, there it is. So now I want to know the improvement.
213.36.
So let's see if we can calculate this improvement here. So let me just use ChatGPT. This is a negative number. So let me see if I can. All right, do this one for me. So in 2022, if we had a net income of negative 339.57 million, and then in 2023 we had a negative net income of negative 213.36 million, what has been the percent improvement? Obviously, it's less negative. So what is the percent improvement in that? So that's actually going to be pretty good to kind of see that, because, you know, obviously from a numbers perspective, they improved by we'll do that later right now. So if you convert it, yeah, so it's about a 37.17% improvement, which they were able to drop. They were able to essentially save $126.21 million. Now, how much of that is ACO? And that's the issue with this. Now, because this is baked into ACO, even though the revenues have been unbaked. This is baked into ACO. So again, it's a bit. I think this here is focused more on the Medicare Advantage MCR, and this here, the reason why it's a 37% improvement is because ACO was killing it, and it would have been a lot more. And you would have to figure out how much of the ACO was giving us the hell, which I don't think they gave us those numbers, unfortunately. We would have to strip them out. But even then, that's a 37% improvement with ACO. So I can assume it's going to be a lot. So in 1 year, if they can go from, if they can improve. So essentially, so let's be specific here. How much have they added to their profitability? That's really what it comes down to, is how much do they add to their profitability in 1 year? So 245 subtracted from 87, that is about $158 million that they added per member per month. So you go in and you turn that into a million. So they, let me think. So they added, you have to remember how many members did they have at the time per member per month. So you have to 245. So let me do the math again. 245 minus 87. So they improved by 158. So how many members did they have in 2023? To answer that question, we would have to go to this here. Is this Q3? Yeah. We have to look at lives. So they had about, they had the still, you see, you remember they had the non-insurance lives? This was the thing that killed it, which is why it only improved 37%. Because remember, if you don't recall, the MCR for the non-insurance was still 100% versus the 82%. Looks like the MCR for the MA has always been the answer. And that's why I always argued they need to cut the, insurance MCR. And a lot of OG lifetime access members were like, no, we need it. No, we didn't. This was really dragging us down. Right. So I'm happy that, this was cut, and this was their guidance. And you could see this was their, next year guidance, which we already went through, which is really good. So now knowing the lives, this is per member per month, we can take that and say, multiply it by 81,205. So they added about $12.83 million PMPM in profitability in 1 year. You multiply that times 12, they added $153.9 million in profitability. And a lot of that was destroyed by ACO. So you could see in 1 year, they improved by, $153.9 million in 1 effing year. That is huge. That is huge. So all the pain, again, that we're feeling now, this will soon be tailwinds to get us up another $100 million. It's just those fixed SG&A costs need to stay down and stock-based compensations going down. So if you think, I'm just looking at the comments now, if you think that this company is going to go bankrupt, is that what you're saying? Because I don't want to call you stupid, right? If that's what you're saying. I don't know anymore. I'm losing patience. Again, wealth is transferred from the inpatient to the patient. Let me see if I can find that quote. Yeah, so whoever is calling this bankrupt, you're like I'm here and you're like in you're opening up a daycare in Minnesota, right? What's going on here, right? So the stock market is a device for transferring money from the inpatient to the patient. So yeah. So that right. So looks like the reason why they dropped here was because of Part D. Again, I'm trying to really, again, I wasn't able to do all this without actually having this information. And now we just got a new data point by looking at the past. They used to be at 245 PM. And that was in 2023, guys. And that was when they lost, negative $213 million. And then what do they lose last year? 43 million. So they improved by another 150 million freaking dollars. And then maybe this year they might lose negative 70, negative 80 million, but it's still another $100 million improvement. So what that means is most likely, if they didn't grow, then their per member per month would probably be, I don't know, like maybe like 300, 350. Oh, is that what you're saying? I don't know. BK, back down. I'm like, BK, bankrupt. Again, I don't know, man. I'm like in my head thinking out loud right now. So I'm looking at what the hell is this guy talking about? Okay, sorry. I didn't understand. Again, I don't know. I hate like I even hate this thing here, PM. Like what was that? Like you take 2 Tylenol PMs, right? So okay, my bad. I just, as you can see, I'm like focused in on these numbers right now. I'm thinking out loud. Hopefully you guys enjoy this. I'm thinking out loud. So in terms of profitability, I don't know. I mean, I think profitability might go anywhere between 30 million, 20 to 30 million to maybe 20 million to maybe 50 million. And if it's any more, then yeah, but I see this company making 150 million plus in profits in the future. Now, we can answer the question of when Wall Street thinks this is happening. We have a terminal for that, which we can access here. Let's look at the beta mode here. And let's open up, we'll type in CLOV. Obviously, this gives you support and resistance lines and all these things here. Let's look at analyst estimates. And let's look at profitability here. So it looks like in 2029, they're expecting Clover to get around 79 million. This is in the backdrop of them not believing in Clover Health, because if you go to the most recent quarter and look at the questions for the Q&A discussions from UBS, this is what he said. He's pretty much saying, hey man, how do you know that this might not happen again? Let's read it.
Jonathan Young, okay, obviously, you got the elevated utilization in the quarter. Last quarter, you had pharmacy and dental issues, and now it's inpatient, outpatient alongside other supplemental benefits. I'm trying to frame out how we should think about 2026 from a BAR perspective. Like, I understand that the stars will be better, these cohorts will mature, but at the same time, you're also going to grow what seems to be fairly significant. I'm fairly certain your benefits have gotten richer. So, how do you plan on? Is there a mispricing issue that may have occurred for 2026 given what's occurring here? Or are you fairly confident that this is encapsulated in your bids and that you won't see a problem in 2026 given what you're kind of experiencing now with outsized growth and that seems to be the driver of the pressure here?
So he's pretty much saying, hey, man, you grew a lot. Now you're saying inpatient, outpatient, yada, yada, bada, bada, bada. Is this going to happen again in 2026? Are you going to give us guidance and are you going to uppercut us and basically pull the rug on us? Let's see what he says. Peter.
Peter Kuipers, Jonathan, it's Peter. Let me answer that question. So, if you look at our earnings release and the prepared remarks, on a normalized basis, excluding prior year, PPV, the underlying incurred cost trends, excluding pharmacy, is around 4%. So,
and that's the big thing. He said that if you exclude pharmacy, our costs are only up 4%, which is actually pretty good because those are the medical cost ratios, which means that it's sub low, to mid in the 80s. So that's actually pretty good. So it's that Part D that really screwed them versus the inpatient, outpatient, dental, and yada yada.
So, given the higher utilization trend that we see and also the higher mix of new members, we think that's a solid performance. Now,
So he's pretty much saying, given the higher utilization trend that we are seeing with the higher mix of new members, et cetera, that's pretty solid performance given it only went up 4%. So a lot of it came from Part D.
Like we said in the prepared remarks, we had expected to do better, so we'll work on that. For next year, I would say that cost trend roughly is baked into the bid as well, but that's just one part, right? We have a number of other tailwinds as well as the 4-star payment year, the rate notice on Part C, and of course, the direct subsidy as well on Part D. So, plus that SG&A increased leverage. It doesn't impact BAR, of course, but, so we feel that's baked into our bid. And then also, I would also say, like we said in the past, we're nuclear precise of where we do our marketing and target our growth. We're focusing on so-called priority markets that meet a couple of conditions. One, where we have a solid Clover member base already. We also have in those priority markets good coverage from the Clover assistant perspective and home care perspective as well. So, we're targeting growing in the areas that we want to grow, and that should also help BAR go forward.
Exactly. So he's pretty much saying we're nuclear precise.
We're nuclear precise of where we do our marketing. And
so that makes sense. So they're probably going to want to market in areas and continue to grow in areas that they have the Clover Health home care and have physicians in that network area to allow them to use the Clover Assistant faster, which enables them to grow more profitably. So based off of this, I'm thinking, and I'm really excited for 2026. And I'm really excited for this next earnings report. I know it's going to be bad. It's probably going to be a bad one. No, it's going to be a bad one. If you go to Q2 2025 this year, I went ahead and I pretty much basically said that, Q4 is going to be terrible. Q3 and Q4, if you don't recall, right? I said it was going to be bad, right? And so Q4 2025, which is going to be in a couple of months, we're going to hear from them, I think in about a month or 2 months from now, we're going to hear the guidance, right? In about a month and a half, I think, right? We're going to hear the guidance from them. And, it's going to be upsetting because, naturally, Clover is going to be like, well, naturally, they're going to say, well, I don't know. They're going to say, well, we gave them too much of an optimistic EBITDA last year. Let's just give them so I think what's going to end up happening is they're going to give us a smaller net income than what they are most likely going to do. It's only naturally to give us less because it's always better to outperform. So I think that maybe Q4 2025, I fear that in the next couple of months, once we hear this information, it's going to get to a point where we're going to be kind of underwhelmed and say, that's it. That's your net income. It's going to be that low. And it's actually better that way because if an MIT study said that earnings surprises are the best to move a stock price up. And as you can see in Q2 2024, they made 7.41 million. What happened to the stock price? Again, this is a science, right? And you can apply it to Palantir, your AMD. Yeah, you can become emotional. I just call you poor, right? If you're emotional and can't handle the big boys tables and your investments, then you're poor. You're poor. You have a poor mentality. So you sit down, you be poor, and go to the Department of Economic Security and go be poor, right? I used to go there. I used to get food stamps. I'm done being poor, right? I was broke at the time, right? So if you want to go ahead and be emotional, oh, I'm poor and poor, then go be poor, right? This is how Wall Street works. There's ebbs and flows. And if you want to invest in an unprofitable company and complain about the stock price, then you're stupid. Then you are stupid, right? If you really want to go ahead and complain about an unprofitable company, the company is losing money, right? So the goal is we need to get to positive free cash flow and then positive net income. That is when things get repriced. And have we done that? Well, I think it's very clear by looking at this bar graph. The red line is net income and the purple line is free cash flow. And you can see it's becoming less negative every year. In fact, it became free cash flow positive for the first time ever last year. Obviously, this year, the red line is going to be a little bit more up. It's going to kind of be like looking like this a little bit, not as bad as this, but it's going to be a little higher, maybe an extra $20 to $40 million higher. But that's because of Part D, in which they're going to fix. But overall, the general trend of this is it's improving. And if you're complaining about this improving, then you should never invest in a profitable company. You should wait till a company becomes profitable. Wait till it shows that it's, good. And by the time that happens, the stock price would go to $7 to $15. And then you can go ahead and invest in a $10 to $15 stock. And then when it goes to, 20 to 30, then you can go ahead and make your 100%. You can get the fuck out, right? But, if you're going to go ahead and complain about an unprofitable company and say, oh, scamming, must give Vivek as a scammer and all these people on, Twitter, you're just a complete moron. You're just a freaking idiot, right? At that point, right? So that's what it comes down to, right? Look at SoFi when it was unprofitable. It was like $4. Look at Palantir when it was unprofitable. It was $6. Look at AMD when it was unprofitable. It was $1.70. Look at Carvana when it was unprofitable. It was $4.60, right? So, $4.83, right? And the list goes on. Look at Tesla when it was unprofitable. It was $18, right? So, to complain and to do this, you just go, just accept being poor and just go. Just go be poor. Just go ahead and take the blue pill, drink the water, and just go to sleep. Go be poor, right? At the end of the day, right? Again, I've done the best I can from an educational perspective. I've designed a freaking software that has 2.5 billion outputs of institutionally graded data. Now, if you don't believe that, I don't believe 2.5 billion. Let me give you an example. This is just from one ticker symbol. If you go ahead and just type in Tesla, and this is just using a 10-year analysis, not even a 20 or 30, right? Like United Healthcare. And if you were to say analyze, we will analyze every earnings report for Tesla, and you could basically see, the different types of words that they're basically using. Optimus is a new word they're using. Let's graph Optimus. Oh, shoot. Optimus has been growing, and they've used the word Optimus here back in 2021. What? They've used the word Optimus back in 2021? Let's go ahead and investigate, right? Let's go all the way back here. What is Optimus? Let's go all the way down. Tesla bots. Optimus. The Optimus name seems to be sticking, at least internally. Optimus subprime, right? This is what Elon Musk is saying, right? This was back in 2021, right? So, if we go ahead and if we were to, let's say, export this on an Excel spreadsheet, you get it immediately. And then you go in and let's just, let me open up the Excel spreadsheet here. Hold on. Where the hell is it? Oh, it's in downloads. Yeah. No kidding. All right, let's go ahead and let me show you something. Okay, let me show you something. Let's convert it. Okay, so this is the Excel spreadsheet that we just downloaded from the Al Stock Trades terminal. Now, if we go to the terminal here, we have 376,000 tokens. So if we were to go all the way down here, look how much we're scrolling. Let me just zoom in. Actually, let me just zoom in here so you can see the mathematical analysis that's happening right now. Let me just scroll all the way up so you can see the analysis that's happening, right? Let's go ahead. Let's keep scrolling down. This is just one stock, one ticker. How many outputs is that? We're at 2,000 outputs. right? That's just one. We have so many terminals, right? Look, 3,000 outputs, 3,500 outputs, 4,000 outputs, 4,500 outputs, 5,000 outputs, 5,700 outputs, 6,000 outputs, 7,100 outputs, 8,000 outputs, 8,600 outputs, 9,000 outputs, 9,147 outputs. Now, what does that do? It translates into all this data that you can go ahead and do. And that's just one word outputs. What about 2 word, 3 word, 4? You're starting to see the data that's in here, right? So if you go to sleep with that, then go be poor, right? At the end of the day, what I'm showing you is exactly what hedge funds are using, right? And at the end of the day, while you sleep, I work hard to make more money than you, right? When you were playing video games, I was homeless out in the street, in an alleyway sleeping, eating from dumpsters. And after I had my filling of whatever dumpster shit food I was able to find and eat, I find a little light near an alleyway and I open up a book and I go ahead and I read and I do math. So I'm able to go to high school the next day and I'm able to go in and give my homework assignment so I can get an A to keep moving forward. Every little dream that you kicking like a little bitch in your dream, I was working, opening up my book, working and doing mathematical problems, you doing my chemistry homework and science, moving forward. While you had your Christmases, while you had your bullshit, all these things, I was working my ass off, right? And I was continually moving forward, right? I keep moving forward. And there were people when I was teaching and I was trying to help, a lot of people were saying, well, that's all bullshit, whatever, yada, yada, yada. Well, all those folks now, they look at my, over $50 million net worth and they're like, well, shit, wow. So at the end of the day, you decide where you want to go. I'm a winner, right? I like to win, right? I don't go into this losing, right? Again, do I do it very pompously? Yeah, I don't give a shit, right? I don't like to play in people's system. What is that guy, the fighter? What's his name that Dave Chappelle talked about? That, he was the first black heavyweight champion. Look into his story, right? He was the first black weight heavy champion. And I want you to go ahead and take a look at this. His name, what the hell was his name? The hell is the first black weight heavy champion that Dave Chappelle was referencing? Now, let me see if I can find him. No, it's not that one. First black weight heavy champion in the 1900s. Was it 1900s? Yeah, 1900s. Jack Johnson. Look up Jack Johnson, right? Jack Johnson was the first black heavyweight champion. And the issue with him is when he won, he liked to rub it in people's faces. He wasn't humble at all. And you know what he liked? He loved white women. He loved white women so much that he used to rub it in the white man's face, that I will beat you up and I will, pretty much take your white woman. That's what he did. And he went on state to state taking people's white women. There he goes, Jack Johnson, right? He went ahead and he went on and, beat this white guy up and took his wife, right? He just had a bunch of white women to a point where the United States passed an act called the Menace Act, whatever it was. And it pretty much says you cannot bring white women and traffic them. And they did that on purpose, and they stripped him away of his money. And what does that tell you is when you become successful, a lot of people say you got to be successful quietly. You got to be humble. What I say is, F you, right? I'm loud and I'm proud, right? And I'm proud of the LGBT community, right? I just felt like saying that, right? I'm loud and I'm proud, right? It sounds like I'm about to say, something else, right? But the point is I'm a winner, okay? You come with me, you're going to win, right? There's going to be some obviously mistakes down the road, right? I slept in unknowingly in another homeless man's area and I got my ass beat. Yeah, there were nights like that, right? Where I didn't have money to go to back to Tempe from downtown Phoenix. I didn't have enough money to go on the city bus, so I slept in an area that I don't normally sleep in, and I got my ass kicked. Right? Yeah, that was a mistake. Right? You make mistakes along the way. Right? That's fine, but I learned from my mistakes. Right? Give me someone who went from homelessness to becoming a multimillionaire, to becoming a medical doctor, to graduate top of his class in undergrad with 3 cross-interdisciplinary degrees in neuroscience, physiology, sociology, and then get a master's in cellular molecular medicine dual degree program with an MD, right? Who, oh, by the way, built a global neurosurgical alliance nonprofit where we had people publishing in Palestine, Gaza, and at Harvard and Mayo Clinic. Oh, did I forget? The over 2.5 billion outputs of institutionally graded data that we just basically looked at, right? So the point is very simple. At the end of the day, Moses went ahead and pretty much said that this thing's going to flood. People didn't believe him. So they got, sucker punched with beautiful water into their lungs and they died, right? So at the end of the day, you could take a horse and you can basically slam it into the water, right? But it's still, you cannot force it to drink water. So at the end of the day, you got to, ask yourself, who do you want to be, right? Where do you want to go, right? Was it Noah? My apologies. Noah or Moses, they all look the same to me, right? Right? It was Noah, right? Obviously, of my Jewish past, we take everything, right? It was Moses, right? I think of the water, right? It was Noah, right? Noah's Ark, right? There it is, right? I'm Christian, but, my mom is Jewish, right? Okay, so now, and, being Christian, it's in the Old Testament too, so it's all the same to me, right? So the point is go find me someone who's one like me. I'm a scientist. I do scientific crazy shit. You can see it at what I built. I just showed you in the past video, I built an AI agentic model where it takes control over your computer without you doing anything, right? Do you understand who you're talking to, right? So just put that into perspective. And yeah, a lot of people, you got to be humble. You got to do this. You got to, again, this is one of the last times I've seen an asymmetrical opportunity like this. I'm sure more will come in 15, 20 years from now. But a lot of people don't believe in Clover Health. They don't. And that's fine. That's good. Because once it works, this thing has the possibility of disrupting a whole industry. Why would you see Humana on a subdomain? Why would their name be in the Counterpart website? Why wouldn't it even be there? Humana would sue Counterpart. Why do you have my name there? It's very clear there's a partnership, okay? And if you just can't get that through your head and understand that there's other future revenue about to come online while still having an incredibly profitable Medicare Advantage company, then, honestly, you deserve to be poor, right? It is what it is. And I know this is a very sad thing to say, but at that point, you have someone who broke down the data, is doing quantitative text analysis. This is computational linguistic analysis, where I even show you and cite the thesis of the damn proofs of the mathematical sequences that I'm using in order to basically be able to do this analysis right in front of your eyes. So in any case, it is what it is, right? And if I'm harsh, again, this is how I teach. You take it or you leave it, right? Go talk to Nancy Pelosi and see if she's going to help you, right? Go talk to anybody and see if they're going to go ahead and dedicate this much time to you guys, right? Go ahead and go find someone that's going to give a shit about you, right? No one's going to give a shit about you, right? So I hope that this makes sense, and I hope that this video was helpful. This is a waiting game. They're going to be profitable in 2026. My fear is not as much as I want them to, but that's just me being a little greedy, which is fine. But next year, Andrew, if you're watching this, you have to go ahead and prove that you can show the money. And I'm going to be looking at this, right? You have to prove it's been a long time. It's 4 stars, right? So you got to show us. You got to show us the money. And that's the only thing I would agree to the pessimistic folks, is you got to show us a little bit of net income. I want a little bit more, but if not, understandable, right? And this whole Part D, inpatient, outpatient, hopefully that becomes optimized. It's very difficult because you came into COVID, then you came into this disruption. United Healthcare stock was down 40% to where Warren Buffett had to come in and buy, right? And then you see Molina now with Dr. Burry coming in and stepping in. So at the end of the day, there's going to be a lot of naysayers out there. And then you, the subscriber that's been watching me for a long time, look at my life and see what I've done. I started a food program that fed millions of people that did not have food to eat. I fed starving children in Arizona, right? I helped people that had their med schools blown up, right? With the war between Israel and Gaza, I was able to help that medical student publish in with Harvard and Mayo Clinic. Now you might say, well, hey, you're a Christian, but you have a Jewish background. Why were you helping this Palestinian? Well, my significant other is Palestinian, right? Listen, I am a Jew by my mother, and I'm a Christian by my faith. At the end of the day, there are 2 different types of folks. There's Jewish America, which believes in a whole different thing, and there's others, right? I hope that you can see within your hearts of hearts that what I'm trying to do here. I'm trying to teach you something that unfortunately has been blocked from you, right? And just like how a lot of folks are feeling upset right now, they're like, oh, I don't know what to do, yada, yada, yada. Last year, when the stock price was flying, they were on cloud 9. And the problem is when this circuit system of the adrenal glands above the kidneys that sit, they activate a fight and flight response that cause you to, it activates the survival response that you think, things are ending. Listen, guys, I went from the public portfolio, $1.5 million to $800,000. What drop? That's what, $700,000 drop. And what am I doing? I'm buying more. I can't time the market. Timing the market is dangerous. Yeah, could I have done it predictably based off of the fundamentals this year? Yeah, of course. But if I continue to do that, I know that I'm going to get my ass handed to me. Because all they got to do is release a partnership, show SaaS numbers, do something to where this thing basically explodes. And then what? I made all this hard work and videos and all this to make a couple $1 million, right? So that's one pathway. The other one is a contingency. So let's say if Clover is not as Clover as I thought it would be, then I would engage the covered calls and cash secured puts at the money, which means I would make anywhere between 5 to 10 to even 15%, especially when the stock prices rise. I will be able to collect premium off of that. And I will be able to essentially make around, I can make right now about 24, 25K per week. I can make around 100K per month. I would just go in and take that 100K and keep extrapolating it and then wait for it to just go to its lower intrinsic value. That's fine, right? But other than that, I see a path, a turnaround of this company. I showed you a stock shop from Peter Lynch that talked about turnarounds. I literally showed you a Windows 95 computer installed on the Mac to open up Windows XP to open up Peter Lynch Stock Shop, which if you want to buy, it would cost you $20,000. So there's only so much you can do. I've showed you different types of intelligent grade systems. Went ahead and showed you that if you analyze Clover's language, you can see from the perspective of using the quantitative text analysis, you can, without a doubt, you can see that the word profitability has been used a lot. Look at the times they've used profitability. This is the history of Clover. Look how many times they've used it. It literally shot up. They are about to break to profitability. They're about to become a triple dragon. The only issue is this has not been documented with any other stock because this is information they don't want you to know. Right? So, and just, ask yourself, if someone has the intelligence to build this and build everything that I built, then perhaps just maybe listen to what I'm telling you and go to ChatGPT and type in everything I'm saying and fact check it. And you come to your own conclusion, because I'm not a financial advisor. I'm not anybody. I'm nobody, right? But just look and just listen to what I'm saying. And what's my motivation? What is my motivation in saying this? Why am I saying this? Look up my name on YouTube. I know, you're on YouTube, but look at Albert Allen and Michelle.
My name is Albert, first-year medical student. What's your name?
What have I done?
It's a humbling career where your whole life into the hospital, you're assisting patients in need. Going into college.
What is the thing?
Where I had, and there was
watch this video. This is Michelle. This is the food program where we're helping feed hundreds of thousands of people. And this is just one drop area. There are many, many more. We're helping the elderly. We're helping a woman that
the patient in as a whole.
Creating a produce rescue with my 3 cross disciplines of that rescue bridge the gap.
Something that is in my heart, and it's something that I use every single day of my life. Like, for example, if a patient approaches me and comes from a historically marginalized area and group, I'm able to assess that, and I'm able to take the patient in as a whole.
It's creating a network, it's creating a picture for you, or whatever it is.
Taking the problems that we have, and it's that I got from sociology.
Now, hey, watch this.
That I'm using today are taking the problems that we have in existence with our country and creating solutions. These are the type.
So what solutions am I creating? You see a woman here that's a veteran. She served this nation. She's a veteran. And guess what? She came to me and she said that I want to work for you. I want to be able to give this food to help my community. And in exchange, she needed food because she didn't have a lot of money. So guess what I did? I gave her more produce than you could ever think of. Just imagine all that produce I gave her. I filled her up with so much produce, right? What is my mission? Right? It's really right here. It's really right here.
A better.
The skills that I got from sociology.
It is that you want to be.
The skills that I got from sociology that I'm using today are taking the problems that we have in existence with our country and creating solutions. These are the
creating solutions. Now, what solutions? What problems do we have, right? We have a lot of younger folks that can't buy a home, right? Because home prices have gone up. We have a financial literacy problem where people think the stock market is a gamble, okay? What issues do we have? That we have people that work in 2 jobs in order to survive, right? What else other issues that we have, right? We have the rich getting richer and the poor getting poorer with no end in sight. So what did I do? I created a stock terminal, right? A terminal that is able to take the noise out of it to help you figure out to say, okay, I have a company. It's losing less money. The stock price is still the same. It hasn't really done much, but it's becoming more profitable. Interesting. I'm teaching you how to do intrinsic value so you can look at that. Now you have a PE analysis. the price to sales valuation model. You have the, standard deviation model. You have these
types of
folks
issues that I
complaining about the stock price, when if you were to look at the standard deviation model, where the hell is it? Where's the standard deviation model? Rolling deviation model here, right? And if we were to go ahead and look, this is a different terminal. This is not the quantitative text earnings call analysis. If you put a custom ticker and type in United Healthcare, look at this. This is United Healthcare from 1995 to now. These are standard deviations. This allows you to nominalize it and relate it to the S&P 500. The last time United Healthcare was this down, let's just follow the mouse. The last time it was down, I want to see a blue line here. Do you see it anywhere on the screen? Oh, it's right there. When was this? Let's zoom in. The last time this happened was 1999. The last time it was down it's like literally a replay of the .com bubble. And then all of a sudden, the stock exploded. What did Warren Buffett do? He bought. Okay? This is all data. There is no emotion here. It is all data. Over 2.5 billion outputs of institutionally graded data. Imagine in 10 years, there's going to be comment sections that are like, why didn't YouTube recommend me this channel? Oh, why the YouTube app? Just look at where I started from. I started in an alleyway eating from a dumpster because that's the only food that I could afford. While people had their Christmases and Thanksgiving, I was out on the street learning, and I couldn't visit the Taj Mahal, but I read about it, right? My book was my summer vacation. Right? And my imagination was how I traveled. And look where I am now. I'm at a fucking golf course, right? That we control all of, right? I have over $50 million, right? I'm a medical doctor. The list goes on. How was I able to accomplish that? How the hell was I able to do that? And now I'm trying to teach you. This is the goal of the channel. Do I care about the transitions? Do I care about all this other shit? I don't care about that. This is the live. You take it or you leave it. That's it. I don't care about being a big YouTuber. I don't give a shit about that. The people that want to hear can hear. People don't. It is what it is. Opportunity meets folks, that are ready. All right. With that said, thanks, Al. You're a good man for sharing your knowledge. No, of course, and I'm happy that all you guys are growing for the folks that are listening. Again, guys, there's going to be people out there that want to learn, right? There's going to be people out there that want to continue reading books, that are lifelong learners. Those are the type of people that we attract. We attract folks that are lifelong learners. And guess what? For folks that are not lifelong learners, we spit you out. We don't want you. We don't want we don't want negative people. We want people that are lifelong learners. 12 likes. That's what it is, right? It doesn't matter, right? At the end of the day, the data is there, and then ultimately, as time progresses on, you'll realize how powerful math is. And then by then, they're going to tell me, what's the next stock price? What's the next stock? What's this? What's this? And I'm going to say, hey, there's the methodology, right? Go out there and go find it, right? We've done the due diligence. We've shown the path, and we went ahead and showed this beautiful case study. And this beautiful case study had lows and peaks and lows, and soon we're about to go on another peak. And you look at sentiment. Look at how people's behaviors have changed. Look at today's date and look at the stock price and see how retail investors change their sentiment. That's why Wall Street calls them dumb money. They're too dumb to be given this amount of wealth. It's almost like Wall Street looks at them and says, you don't deserve to have this much money. You're too stupid to have it. You deserve to be a W-2 employee. You're too stupid to have this money. That's what Wall Street does, right? And if you don't believe me, just, go out there, go get a finance job and go work on Wall Street and come to me and tell me how they speak of retail investors. I'll see you a lot. It's been a pleasure, guys. Happy New Year. And I hope that this live was good. Hopefully you got some use out of this quantitative model. It's about to go live to lifetime access members. We're about to release it now. And this is going to be a beautiful case study. It's going to be pretty amazing. And at the end of the day, you're going to see the difference of someone who's trading in and out versus a long-term investor. I've been consistent with my message for how many years versus all these people bipolar. I've been a rock watching and waiting. And I think we're about to be ready to catch our meat finally, right? It's about to happen, this triple dragon, right? I'll see you on the next one, guys. Have a nice day.